Welcome back to the Real Investment Hour. I'm Danny Ratliff, Certified Financial Planner, here with Richard Rosso and our special guest, Perth Tolle, the founder of Life and Liberty Indexes. So we're extremely excited to have her today, talk a little bit about emerging markets and about her unique index that kind of compiles these things in a totally different way. Now, we're excited that she's here for a couple reasons, too. One, Richard's actually wearing pants today, which is great.
I have to when women are in.
I know. So,
Thank you.
talking about stepping the game up a little bit because
shoes,
she's not
too.
used to slumming it, right?
Yeah.
But, yeah, so
I
it's
even
good.
shaved and showered. I mean, I did all the things I should do as a human.
It is great.
Because it's about life and liberty and personal hygiene.
Yes.
You gave Brent and I a break, so thank you, Perth. We
You're
really
welcome.
appreciate
Yes.
that.
Give me liberty or give me deodorant.
I got a beef with Perth. The
Really?
only reason I have beef is because she's tied to emerging markets, and I'm always puzzled by how China gets pulled into an emerging markets as the second largest economy. I mean, sooner or later you got to start to take certain economies out of this and maybe broaden or change. Am I wrong about this? But
Yeah.
when I think of emerging, I think China's already emerged.
Well,
Am
a lot
I
of those
wrong about
traditional
this?
ones have, right?
Yeah.
No,
Well, a
go
lot
ahead.
of
You
the-
educate me because you're a good educator
Well,
on
I'm
this.
glad you brought that up. Yeah, a lot of the bigger emerging markets can be considered, small developed markets, and some of them are in line to be considered for promotion, soon.
Ah.
So, like Poland as an example. But that's a good point because when you're investing in an emerging markets index, you're going to have 30% in China, and if you include Taiwan and South Korea, which are the China region, highly correlated, you're going to have more than 50% in that China region alone. And you're going to have more than 70% in Asia.
Wow.
So in any emerging markets index, whether you're looking at MSCI or S&P or FTSE or the EM or VWO or any of the ETFs associated with them, they're going to have a huge percent in China, whether you intended for your emerging markets fund to be kind of a China fund in disguise or not. And so it's a great point because we see this from our interested investors is that they are wanting to use our strategy, which has zero China exposure, as
so zero.
no China exposure as a complement to their existing emerging markets.
So as your indexes are based on, really very unique structure overall, right? Because you're looking at the rights to life, liberty, prosperity, property.
Yep.
And then obviously this increases sustained growth, optimal productivity.
Yes.
Leads to all these good things, or actually even some qualitative elements that you wouldn't think can go into an index, right? Because everything's
Yes.
so quantitative, but you have found a way to take these qualitative elements and show or lead to that, hey, if you have these basic or these human rights, it leads to this kind of growth, which is very unique.
Well,
why is China out of your indexes?
So we
what's the
do
criteria
use the three categories of all quantitative metrics of these very qualitative factors of life, liberty, and the rights to life, liberty, and property, or civil freedoms, political freedoms, and economic freedoms. So, things like, for example, civil freedoms are things like disappearances, trafficking, torture, women's rights, freedom of movement, and things like that. And rights to liberty would include freedom of the media, freedom of the religion, freedom of movement, rule of law, things like that. And property would be the more economic freedoms. So we talk about tariffs, trade, right, non-tariff measures, movement of people and capital, and then taxation, business regulations, and things like that. So China has made a lot of strides as far as economic freedoms, but they have abysmal human freedom scores on our data. So, what's in the news now? All the stuff coming out of Central American countries. I looked them up yesterday, just out of curiosity to see where they stand, and they all rank higher than China as far as human freedoms. All these countries that people are coming to America fleeing from. So that's why China has right now no place in our index. We hope that they make it in there someday. That would be fantastic.
Positive, right?
Yeah, that would be. We definitely want them in the index.
Of course.
So yeah. But right now, as it stands, it just so happens that there is no China allocation, and we have high allocations in Taiwan, South Korea, Poland, and Chile. So those are our highest countries, which having those, South Korea and Taiwan in there does give us a high correlation to the indexes that have high China allocation, but with a diversification that can reduce risk in the overall process.
So you have a lot of data that you guys are compiling. How often do you guys make switches in the weighting?
Once a year. So the
Okay.
data comes out once a year.
Okay.
Yeah. It's an annual process.
So now, is this coming out from another organization? How do you compile this data?
Yes.
I know it's a lot of,
And
there's so many moving parts,
yeah,
right?
so right now it's an index, and we don't have an ETF based on it yet. Once the ETF comes out, which should be late 2018 or early 2019, then we will disclose our data providers. But they are one of the leaders of global human and economic freedom measurements.
Okay.
And we have worked with them for many years.
So you'd still keep the turnover low to keep expenses down, correct?
Absolutely. So
Okay.
turnover would be very low, and this would be an ETF, and so yeah.
So I think the biggest thing, I think what you hit the nail on the head, though, is that, China's not in it just because of the overall size. It's not in it because of the things that they do.
Yeah, so this is, instead of being a market cap weighted index, it's freedom weighted. And that's really the difference between this and the other indexes out there.
You're almost creating a new realm of socially conscious. I mean, a very unique. I mean, a very honorable way, but
Yeah.
a very unique, socially responsible way to invest.
Thank you. But yeah, no, it's definitely an ESG strategy, which is like the new term for socially responsible now.
Explain
ESG
that.
is it stands for environmental, social, and governance. So it's looking at those factors as part of your investment process.
And you're keying in. I know you because you're so smart. You're keying into the younger demographics.
Yeah,
Because they're gonna
millennials
key
definitely.
Into, the Gen X, Gen Y. They're going to want to invest that way. They put their money where again, they really walk the talk when it
Align
comes
with
to at
their
least when they
values.
want to invest.
Yeah.
Even though millennials think they're going to be able to retire at 56, that's sort of funny. Writing a piece around that how they're going to do it.
Yeah.
Praying is one of the things I'm writing about. But I mean, this is again. I think it's unique in that because again, we know socially conscious.
Well,
you know
this
what
is-
socially conscious
right.
is?
Yeah.
It's like when you go to the hotel. And if you don't put your towels down on the floor because we're environmentally conscious, and
Yeah.
you go,
So
right,
that-
sure.
That is something that we do encounter, is that a lot of the
towels
people
on the floor. What kind of index is this?
a lot of people that are interested in freedom,
Oh,
right?
okay.
Your libertarians and so forth.
Yes.
A lot of people that are very passionate about freedom, human freedoms, economic freedoms, especially. They are very against the ESG types of strategies because they think, well, ESG, that's not capitalist. But this is like the if you had a
And you tie it to productivity and
Yeah,
economic
so
growth.
if
My God,
you-
you're going to blow their.
if
You're
you
going to
have
blow in their heads up.
metrics
Yeah,
that
you're
drive returns that cause more sustainable growth and have higher, better efficient use of the capital and labor, better recovery from drawdowns because of the innovation that these countries can foster.
So talk about that. Better recovery from drawdowns, because we
Yeah.
always talk about drawdowns, and emerging markets are always more aggressive, and we always look at them as more opportunistic.
Yes.
So, but you're talking about actual recovery of companies. To talk about what your definition or how you're perceiving drawdowns when it comes to.
Okay. Well, I think we're experiencing a drawdown right now.
When Perth looks at the screen and goes, "Emerging markets, they're down."
Yeah, this
Yes.
is a drawdown.
Yes.
2008 was probably the most drastic drawdown that we see here.
Mm-hmm.
So
But you're saying recovery.
recovery, yeah. So the more free markets lay the groundwork for human creativity and progress and innovation. So they reward innovation, and they're not as tied to like one natural resource, for example, in their country. So they have the foundations for more creative and more flexible ways to overcome black swans and challenges in the market, and they're more flexible to adjust to market trends. So, for example, last year with the smart car phenomena in China, right? And you don't want necessarily to we don't necessarily want to invest in China. I'll just speak for us to take advantage of that to capture that that smart car trend. But if you were invested in Chile, which has a lot of trade with China, which we don't have a problem with trade with unfree countries, the Chilean mining companies like SQM, I don't know if can I say tickers? I'm not making a recommendation here,
Yeah,
but
no,
for example, the Chilean mining companies switched from mining other minerals to lithium, and experienced a massive growth in their price. So the freer countries have more flexibility to change according to market trends.
Got it. Very good. Well, when we get back, we're going to continue our conversation about emerging markets with Perth Tolle. And also, Mike, hold on. You've been patient. We'll take your call on the other side of the break. And you're listening to The Real Investment Hour on AM 700, the voice of Texas.
Follow Lance on Twitter @Lance Roberts or go to realinvestmentadvice.com.